and welcome to the Linton Solutions Business Couch Talk. Here with me today is Caxton Pang. Caxton is the Managing Director and Business Advisor at Linton Solutions. So on today's agenda, we'll be discussing about the tax treatment on foreign income and money coming into Australia. So Caxton, there's this common misconception that if you have investment income overseas outside Australia and you've already lodged a foreign tax return, you don't need to report it into your Australian tax return. Is that correct?
Well, unfortunately, this is incorrect. As an Australian tax resident, you are obligated to report both local and overseas income when preparing your year-end tax return. Now, let me just give you an example. Say you are a PAYG earner in Australia, you have some interest income. At the same time, you have an investment property in UK, and every year you make $10,000 net profit before tax. Now, although you have filed a tax return in UK and pay some tax to the UK government, but when preparing your year-end tax return in Australia, you still need to report the UK net income into your tax return. However, the foreign tax you have paid in UK will become part of the tax credit when we prepare your tax return. So in simple terms, if your tax rate in Australia is 40% and your income in UK was taxed at 30%, then there's a 10% shortfall you have to pay for the rental income in UK.
Okay, so in terms of inwards investment, where you have money coming in, what exactly do you have to do and provide to prove that it is not income?
Well, my advice would be when the money coming into your bank account through the EFT, make sure, say for example, it is a loan coming from your parents in overseas, make sure on the description put down the word loan rather than leave it blank, because otherwise tax officers will treat that as an income. For any substantial amount, say $100,000 or $200,000, I would suggest the taxpayer will get the parents to write a stat deck and saying that, hey, this money is a gift from myself to my children and it does not need to be repaid, and make sure I have those stat deck and the bank transfer, keep it in a electronic file. So if tax officers one day give you a call and question about those income or the money, then you can basically send those files to the tax office and clarify the matter.
Okay. So what if for instance, someone wants to come into Australia and they have, say, $1 million from the sale of their property? What do they have to do?
Well, my advice would be, before they come to Australia, and they should, number one, make sure they got all the documents ready to prove that that $1 million is actually coming from the sale of the property before they come to Australia. They should do a statement of asset and liabilities when the visa was granted, so they can see that, tax officers can see that they had a house before. The contract from the lawyers, the bank transfer. Keep everything into a electronic data file. So if tax officers one day say, hey, what was that $1 million for? Where's it come from? Then you can just send all the electronic data file to the tax office to clear the matter.
Okay, thanks Caxton for clarifying this misconception. If you believe that you are in this similar situation or you're unsure, please contact our office and our tax experts will help you to assess your situation.